There we go. $81 today. Nice. That's a lot of percentage though. 81% on the risk from today, not on the whole account, right? Because that's a lot of risk. I'm talking to somebody who's sharing a win today. Apple puts at 187. Not that obvious of a place. Let me open up Apple chart. If you guys have time, go log some metrics over there. That'd be awesome. You can come back here. We have 7,000 subscribers there. We need to wake them up. Apple puts. I don't have an immediate reason for puts, but you do have a prior fail zone. So if you can take some pain with those puts, that's fine. But you should know that it's not the most inflated chart out there. So, like, it's nowhere near its highs. So maybe it happens, maybe it doesn't. You know what? I haven't gone to StockTwits in a while. All right. You might have an echo if you log into both, so you might want to mute one. Wakey, wakey. Oh, wakey. XOP credit put spread. Okay, let's look at XOP. Question is about XOP. That's oil exploration. Let me look at the whole chart. You're long inflation. So you're getting more long inflation. 147, I mean, it is support, but if you lose 147, you're going to 140. So figure out who's inside of XOP, like which tickers. You know how to do that? Let me check for you. Holdings. Okay, so not one big company, a bunch of smaller companies. Devon, Conoco, EOG, Antero, PXD, that's Pioneer, Exxon to a degree, Oxy, Fang. So there's nobody more than 3%. The biggest one is Antero Resources. Okay. That is something to do. Just make sure you have it under control. This, if they continue doing what they're doing, if they repeat this scenario, they're going lower. So let's go into a 2-hour chart. You have sellers at 154, and that would work for your favor. No, I mean against you. And for your favor, you mentioned 147 support, but that is also the trigger. So if they are rinse and repeat, look at that. So let's say I copy the price action from the top to the next bottom. And I say, what if they're doing this again? In a sense where this dip may not have finished already. So be careful with that. I would keep it on a short leash, as they say. And let's see if we can find you more significant levels. Resistance at 152.50 actually, before the 154. And the support is kind of spread, whereas the resistance is more sharp, like 152.50, 154.3. And the momentum. They are selling rallies. And they are stocks. 155 is even another level you need to pay attention. So when I say they are stocks, the market has never been higher. So your support might be great, but if the market has a couple of bad days, and I'm talking like minus 1%, what happens to your 147? Is it in danger? Yeah. So be aware of all of those. Credit put spread is great. Why not do an iron condor to balance out your book? You see how Apple continues higher? Yeah, Apple would not be the one I would pick on right now. Okay, XLI is making a reversion. I wonder if the XLI is going to lose Friday's low. I would love that. Of course, I'm short the XLI, as you know. Let's go to 5 minutes. So these boxes are left with unfinished business. That means candles on the left side were not properly done. So there might be some open orders there they want to knock out. So if we lose the poke from Friday, that's around 125.4. It's an easy trip to the first box. And that's one of the XL ... The XLF, I told you a little bit ago when it was up in the 41.90, it may be looking at 41.75. And if it is, that's going to hurt the S&P. So if you're short with the put here and you didn't book the $30, the 30% win, you may end up with a 50% win. So it's very tempting to hang on to it. Pretty chill way of looking at things here. Yes, thanks, Mert. There's still not a lot of battles on the ES according to Bookmap. Like, not a lot. So I can't tell you who has the upper hand. I can tell you there are more available sellers above than buyers below. So if we let loose, it might be a whoosh lower. You're chicken, but you booked the profit, right, Linda? Yeah, that's not chicken. That's awesome. All right, we have 260 people in our room. Let's go get some people in here and do a couple of lessons. If you haven't watched the videos, I shared 3 videos yesterday, probably about an hour and 40 minutes, 45, with a bunch of tickers. Oh, let's go check. Did you place your shop trade today, or should we hold horses? Interesting. Let me check. I took mine on Friday. I took the Shopify trade on Friday to make sure that the things were there, premiums. So I'll check on Shopify now. Into the live room, people. It's a party. Can I share my chart on Upstart? Man, D, you like pretty high drama stocks. Yeah, let me look at Shopify first. Wait, what is... Oh, that's XLF. Okay, never mind. I thought I did the XLP, not the XOP earlier. Shopify. It's down a little. Let me check my account. Yeah, the trade is greenish, so I took it on Friday. Are you in here? Maybe you're not. Okay, Upstart. Not my favorite company. You should know that. I think they are gouging their customers. And not definitely not my favorite stock either. Very unpredictable. And if we do have a lending problem in this country, this company could go out of business. You should check into, you're talking trading, but if you're investing, anyone investing in this company, you should check how liquid their loans have been after. So their business model, last time I checked, also double check that. They issue loans using AI and then they bottle them up and sell them. Are they still able to sell, or do they carry their own loans now? Because it's better if they sell. There are clawbacks rules, I'm sure. Like if they go bad after they sell them, the government can come back and say you issued junk loans. But you should see if they're carrying on their books, that's even worse. So this level here is not an obvious entry point for Upstart. That's the big picture. But it's also the opportunity. So if you can take out, say, today's high, let's call it 29, you could get to 34, which would be an even tougher place to get through. Between 29 and 32, there's not a lot of volume. This gap created kind of a gap in volume. So if I were to go long, I would buy the dip into 26 to carry it long. I wouldn't chase it with naked calls without real reason. Maybe sell a put spread to buy a call spread. That would be one way to do it. So this is not next 3 months, but this is the next few days. Are you long? From what position? If you are, give me your position. Let's put it this way. The closer it comes to 32, the more out I am. I don't want to, quote, invest in this company. Personally, I think I can put my money in better places. Like Palantir would be a better place than this one. You wanted to take a trade, okay. So 3 months trade, that's a swing trade, okay. You missed a good long entry. So next time it dips into 21, remember that that's where they bought it. You go long and you stop out if they lose it, okay. Or you short it, you buy a put once it hits 32. So that's the big picture, and hopefully that helps. I'm trying to gauge to see if there's going to be any strength from mega caps that are not Apple today. The Dow is giving up a lot. That means banks are falling. So is Goldman Sachs falling? Because the Dow was up and broke out of Friday's top before the market opened first. They just soared. Wolf, that's funny on YouTube. All right, so markers on the ES. So for the last couple of days, since Friday, we have had a lot of interest on the ES, about $3 below here. So we do have support. What you see on your screen, these little tails and the low of the day is support. If we lose them, we may come down to that tail, the white marker that I placed. I'm going to delete that scoop because that was part of the conversation from an earlier time today. It played out, and that's the secondary part. So that put is doing well. Let me see how much it is. It is not doing as well as earlier because time has passed, but it could do a lot better if they can just lose the low of the day. And I'll tell you, if we don't lose the low of the day and the XLF hits 41.75, I would close that put. They probably are not going to do it today. But just watch Apple. Apple, it has the opportunity to just open the floodgates for the bears right here. If you are a bear, or if you have bearish trades that are in trouble and that are now much better, you should book it. For example, the Iron Butterfly is now $200 profits out of a $300 risk if you took it on Friday. And if you still have not closed it, you're making a mistake because it's a pinpoint trade. If we go lower, it gets ruined. So it's not like the lower you go, the more money you make. You're making $200 out of $300 right now. What else do you need? How much is enough? So if the drops come and your portfolio is doing better and you're breathing better, don't just sit back and assume they're not going to revert higher. Assume they're going to jump back higher and put you back at odds with those bearish trades. Okay, like if I have credit call spreads and now I'm breathing heavy, I'm breathing much better, maybe I close half of them. If I had a put that was super red and now it's not red at all, I would close it. Okay, here we go, drum roll. Let's go, Apple. Slip on a banana peel. Someone is asking, the transition to Thinkorswim has been fairly simple. I did not need to import anything, although I backed up everything. My only hiccup is with the online version on my phone. It's buggy, it crashes, and it's not connected to my desktop. My lines are not coming through. I will uninstall it right now and reinstall it maybe. Harbor Freight having a clearance. Okay, apps. Where is it? Oh. Oh, there it is. Force stop. I'll deal with it later. All right. Hey, Nick, I got into a Palantir 22 call. And before I saw they had soft outlook, do you think? Okay, I don't understand the question, Alan. Let's look at the chart. Palantir. Do you think it's bounced off its bottom or have longer to linger? Well, it did bounce off the bottom. So it did bounce off the, okay, hopefully you can hear me. It bounced off the bottom, but now you're running into a prior problem. So I wouldn't start calls here. If I have short-term call wins, I would lock them or book them and re-engage on the dip or after a dip if it was a trade. You know what? I don't think my studies loaded up in Thinkorswim. I don't see one anything here. Let me check my studies. So to answer your questions, yep, they're all gone. They're not here. Interesting. That sucks. Like a lot. What the fudge? You guys' studies loaded? Like I have 30, 40 charts, no studies, not one wolf wave, not one harmonic, nothing. And if I pull it up, control edit, I see TPO profile and moving average, and that's it. Yeah, I do too. They're not there. And I see the name of the thing. It's correctly named and everything. Very bizarre. I didn't even pay attention. All right, so that sucks. There we go. Now we're talking. We'll deal with that later. The put that we discussed is now $127. That's not enough. Why is it so cheap? It should be more. 127, 128. It costs $95 to open. So I'm not sure why it's not more. Okay, 131. You know, this is definitely bookable. For me, I'm good. That's 30, 40%. But I'm wondering, why is it so cheap? It should be more. This gap is not really all gap, so don't count on, hey, I want to fill the gap. Book profits based on percentages. This was a trade. You crushed it. Don't worry about leaving money on the table. If you took too many, then you can leave runners if you want that. They will pay a lot, but it's better to lock in some profits. So Apple is still not dropped. So this is who's just pooped themselves. The FXY, no, that is not a contributor. Bonds dropped. So maybe one of the Fed heads is starting to flap their gums. Okay, Rod, I lost them too. I'll figure out how to get him back and I'll share, okay? Yeah, we have Powell talking tomorrow. Yeah, that 522 put has not gotten more expensive, so I think it paid you as much as it can. I would book it. So that trade, check mark. This trade was designed before it even started. I love that. Love it. So even slower traders can take it. We were here, we said we could come down, we set up a trade that worked. We said if we come up, this would be the trade, and we set up a trade that worked. So now, remember, they left some unfinished business up here. So this is a crazy market. Don't bank on this holding on. If you want to catch this falling knife, but to hedge your bet, let's say you have a bearish setup and you had a credit call spread that expires in a couple of days and it's under fire. I shared one. I know there is one. and you have not defended it, what are you waiting for? That is loud. Sorry about that. Okay, so levels wise, we don't have, we have resistance inside that R is still there. So if I move it quickly, let me put a marker actually. Right here is R. So if this rally comes up to here and you had calls that got better, that might be the place where we say, thank you, you gave me half my money back, let me get out. Now, we can't recover everything and come up to here. That's the secondary R. This is a crazy market, but you can't just count on that. You have to use proper risk management procedures at any point in time. So the bulls and the bears, that's the message I had in last night's video. We are all emotional right now. Everything is, even when I talk amongst friends, they're emotionally charged. Main Street and Wall Street, the opinions are crazy. The dollar must be spiking. The FXY is tanking. Do I have the Dixie here? Yep. So what is happening to GC? Somebody was short. Nice work if you shorted. I forgot who it was. You reached it. You reached out. Oh, Steve. Steve, are you here? Steve Z. Be either last night or this morning. Last night, you reached out. Yeah. So if somebody is down on a call or a put, and they're down 50%, that somebody needs to put in place a procedure to where you don't let that happen unless it's on purpose. Most stops should be less than 50%. Every scenario is different. Every portfolio is different. Those are my thoughts. Okay, today I did mention an iron condor, and if you took it, you're up $10 or so. The credit call spread completely paid out, of course. The credit put spread is still totally acceptable. So there's no panic. But the shocking thing was how narrow the iron condor was. I don't remember them being $40 wide or $45 wide often. So I discourage people from taking it. In hindsight, I don't regret my decision. All right, so if we look at the high of Friday and the low of Friday, we are almost exactly in the middle. Let's use the upper right-hand corner for that. SPY, you see it? We have a high and a low, and we're right in the middle. I bet you if I use Fibonacci thingies, it would tell me that. And we can probably look at the golden zone. We are exactly at the middle. 521.5 and 520.8 SPY are important. Lower prices are possible, but you have to respect the power of the bulls. We have headlines coming out of nowhere whenever we actually needed exactly what we needed. What was my credit put spread? Okay, it was 52.10. It's now $70 or so, 60. And I'm trying to roll up some credit put spreads that did their job. They're now worth nothing, so I need to roll them up. Roll strikes up. There we go. I looked at candles. There's some weird candles that we left at 5070 in the SPX. I don't know if we're ever going to come back down there, but we left an area of interest down there that's flagrant. Today is 13th. 16th is Friday. Thursday. Okay. Okay. Any thoughts on managing the GLD position that expires this week? Yes, the thoughts were sent out with the trade itself. If I remember correctly, I said I would consider closing it if the sold delta is 35. And didn't I send out a note the other day on that? When it was below 215, I'm pretty sure I did. So here's the thing about it. You waited this long, might as well wait another day, I guess. Let me check on that. I don't have it in my books, but let me check on the premiums. I don't remember the history of what I acted with on that one. So I'm assuming you're talking about the bear call spread, credit call spread. Yeah, let me go check on it. Do you have the parameters on it? Let me go get it. I thought I had it logged and it's not here. My bad. 1 minute. GLD. Okay, on May 3rd I sent out a note. All right, the original trade was 2 months ago. It was a bear call spread at 215. And update on the GLD 10 days ago. GLD is getting much better to the point that I would want to trim it. It could still work out because it was below 215. I said net debit was to close it at 88 to close. So that was the message. I would trim it or close it. So you lost $44 if you did that. Clearly you haven't. So let me go check on it right now. I thought for sure I had it built into my platform. So 517, 215, 220, 44. Who did it go to? Ultimates. Unless I'm missing it. No, there it is. No, it isn't. Nah. March 12th. One second. Whatever the price was, 205. I don't remember what it was when we opened it. Yeah, so now you're down $260, $250. Okay, so the scenario is that you're at 50% of the value of the spread because price is right there. A small dip will get you out of trouble. If that happens, close it, roll it, do something. You can indeed roll it up and out right now. So if you go 7 days more than this one, then you can probably roll it up a little bit and delay the inevitable. Please make sure that there is no dividends. Okay, so that you don't get stuck on X dividend day being assigned something weird. Wall Street loved that. Let me know that that's clear. If not, I can elaborate. Okay. I guess I need to send out another message about that. All right, so now Apple is dropping a little bit. It's like the knee jerk is still there. When people panic, when stock markets panic, Apple gets all the bids for some reason, not Microsoft, Apple. Old habits. Now that everybody bounced, the market in front of us is bouncing, Apple is letting up a little bit. There are a lot of sellers above. I would not hold calls. I would not hold calls in the S&P here. There are probably some sellers above. Even before you hit the letter R. If you look at it, there is a seller at 521.50. So now if we make a lower low, that is knocking out some of the buyers here. Conviction. This is a pretty good battle right here, right now. 521.20 is important. There are no open candles below, so there's no reason to come down below to finish. Oh, we're still on a 1 minute. Psh, peasants. What? Come on. All right. If we take out 521.45, that fail right there. Look how nice and neat that line is. It provides a burst that could target 522 with a lot of resistance in the letter R. It might be easier to just to linger down here. Let's see what they can do with it. I'm going to say there are a lot of sellers waiting above. Okay, GLD. Thank you for the reminder there. That's pretty important. Pretty good stalemate. All right, give me tickers that we can trade. Anything falling today out of bed? Did anybody report overnight that we have an opportunity to catch the falling knife in this while we decide what the markets want to do? Okay, gold comment. The low of today matters a lot. It should be bulletproof. Like if you're following GC, 2340 should be bulletproof. If you lose that, you might lose like $12, maybe. Let me see if I can see it here. GC. GC is, oops, wrong one. GC is the futures contract for gold. Oh, interesting. So they already lost the neckline. They are trying to recover it. So if GC is not above 2355, it's probably at 2325 this week. The comments I was making, I think, were shorter term. Yep. So there are a lot of sellers up here. Not a lot. And a lot of buyers at here. So if they lose this one, I was looking at it from a heat map and now I see it from a tail perspective. It's interesting. I like that. It's very nice. Microsoft long doing well. Tesla short doing well. My Google short not so much. Yeah. Look at these gaps down. Who is losing their mind? Nvidia? No. Not the banks. What is that? What did I just do? Trades. I don't know what I just did. Oh, I had a couple of orders waiting to close, a couple of credit put spreads that were winners and one to roll up. They must have fired on this dip. Okay. I get it. Okay, now we have an opportunity to break out from here. Same. From a better vantage point. That's the impression. And then you look left and you see that there's a bunch of volume that they just let loose. So now we have a lot of volume down here from these tails and a lot of volume up here. That is a tight fight right here. So the next, I don't know, 20 minutes should be interesting. So I'm going to tell you this, if we make a lower low, the day is toast. I think the bulls will not have a green day, which is okay. But you know, we have a correction here. It feels bearish because we're not up. I said those words last week. We were flat, and the impression is that we were down, and we had a plus 1% move on 2,000 stocks, and the markets were flat, actually green flat. But the impression was that we were down. Why? Because the big caps were down. So now we feel, the collective we, that we're having a bad day only because we are not up. That is how entitled we have become. And I don't know how long that can continue. Just simple, silly way of saying, reminding us that we are in a place where we have never been before. It doesn't make for an obvious starting point for anybody. Trading, active, yes, by all means. So now we have a catalyst above and a catalyst below, two catalysts below. One at 521, and that might be enough to cause 520.95 to be taken out. And if we lose that, we finish that white mark I have, the white tail. I haven't bothered to look what's beneath it because we have been one-sided. Thank you for sharing, guys. Earlier, Tom shared, um, Wolf is sharing, Linda shared, Climber's been sharing for a whole bunch of time. Ragu as well. I think he's traveling today. The VIX gap held. Somebody made a point. Why is the VIX up? I have no idea. Because it's too low. It's just too dang low. And my calls are still flattish red. So I said to buy VIX calls. I bought them so I can have them in front of me so I can speak to them. I don't need the protection because I'm more bearish than bullish. I bought the calls to have a visual, so I would have skin in the game when I say it makes sense because they hold up well. So now I'm looking at it every day. And I don't remember exactly when I bought them. Actually, I do. 1 second. 4 days ago. So clearly we had 3 bullish days, 2 bullish days since I bought these calls in the market. I should be down a hell of a lot more than 5%. If you had bought puts and we had the last 2 days that we had, you would be down a lot on your puts. The VIX calls are not. They held up well. There you go. Yeah, I think we still have more sellers than buyers on the ES, on the S&P. How many calls? That is so. The question is, how many calls do I need to protect 100,000? That is I am not qualified to answer that for you. Only you are. I can give you an idea. So let's say the market has a conniption because of reasons unknown right now, and the VIX goes to 50 or 30. You can calculate how much money each call brings you. And the idea is not to protect 100,000. I don't want to make 100,000 out of my calls. I want to bring enough money that I can jump in and fix my portfolio, sell some of the shares and things like that. So how many calls depends on you. Do the math. I'm not defending. I don't buy protection for a minus 10% in the market. I can trade and withstand 10% drop in the market if I'm an investor, swing trader, or whatever. I want to protect the holy crap. What just happened? Oh my gosh, we got zombies on the street. That type of protection where we drop, 10% to start. This is a lower low. Hopefully, you get the answer to your question. You get it? Let me know if you don't. This one's for Ryan. Do your own homework on that perspective. Yeah. Yeah, something unforeseen. Like nobody planned on having a pandemic. Well, don't answer that. Don't answer that. But, ash in the sky. We had an eruption of a volcano that shut down all traffic, air traffic in Europe and actually almost the whole world because there was too much ash and they couldn't fly planes. Nobody plans on that. Oopsies. I mean, look at the timing of that white line. Don't you just love it? It just makes my day. And they call it work. I mean, what? If we weren't live, nobody would believe this stuff. All right, so now we zoom out and see what's to the left. I'm going to zoom out in another window. SPY 5 minutes. All right, so we just hit target 2 of a harmonic. That red W on my screen. This looking like that cartoon the other day. we're filling the actual gap from the overnight pop. And the XLF still refuses to go lower. All the XL this and XL that are lower than Friday. The XLF is not even lower than today. I don't get it. That ETF is just a mystery to me. What's the trade here? Fix your broken credit call spreads, fix your broken puts, and see if you can buy a call into covering the gap from. So this was a level, you see those scribbles? That was an important level from Friday. So we just fell into the pivot zone from Friday. It's a place where I don't start shorts, I book shorts, and I go long if I want to for a trade, and you already got a lot of the bounce. So let me go back to the SPY to see how much that put is, and I hopefully you guys are all closed it. It's only $150. I say only. It should have been more. So I would have closed it, bought calls for the fast hands. This is too fast for me. And those of you who missed it are not fast enough to trade it anyway. And some of you probably caught it and will come in and say, I caught the bottom and now I'm out with the bounce. And you are allowed to say it because there's no way you can post that fast enough. This is a 15-second chart. So with less than a minute, they have flushed low and bounced to here. So now if you want to short for another repost of that, you can, but you're pressing your luck. Okay, so now the easy entries are gone. We had a gap to fill. We kind of flushed it right here. We had a level to hold. We didn't. We flushed it. We have a harmonic. It's touched. So you can go long for a swing trade back to 521.30 if you want, or wait for better entries. It's up to you. So you do have a lot of support below and not a lot of sellers above yet. So I would not buy a put here. I was very emphatic about not holding a call earlier. You just heard me. I said I would not hold calls here. Forgot where we were. I think here. We can rewind the tape and find that out. And I said that there's a lot of sellers. Now there are a lot of buyers, so don't hold puts. One second, folks. So this here normally would be a place I would buy puts to see if I can come down and make a lower low. It just doesn't look that easy. When you added before the hour, yeah. And if we drop, maybe we stop at 520.7. So if you want to take a long and you think that this too shall pass and we cannot absolutely, we're not even red on the SPY. Look at it. It's flat. We're up 0.6 on the 2,000 stocks. This is not a bearish day. Maybe the NASDAQ is the only, no, not even the NASDAQ is red. But look at the feeling around here. Feel the energy. All I can tell you is there's a lot of buyers scattered within 0.4 of the SPY. So we are at 520.9 through 0.5. There are a lot of buyers scattered inside here. So if we drop, I think we find support at 520.7. And I'll update us on buy or sellers. So there's not an easy trade here is what I'm saying. If you sold a credit put spread, that's probably the easiest trade. The small caps have just given up the weird spike earlier when they triggered two of my alerts pre-open. The XL this and XL that. The XL posse have lost Friday's support and low, the low of Friday, and now they're trying to get back above it, and they're not above it as a collective. I think we need to watch the XLF, bottom right-hand corner of my screen. I think this is the answer to the market. If you want to short based on the thesis that the XLF is going to 41.73, you have my permission, which means this has another dip in it. That's the only thing that hasn't revisited the overnight low that I see here. We'll see. It's a tough business. There are a lot of buyers below based on Bookmap. So don't know that that can happen, but it's a thesis. E-Trade platform down all morning. I don't know. I haven't launched it today. Want me to check? I don't even remember my password there. Yeah, it's hanging up. Service unavailable. Alan, which broker should you use for trades? Well, all depends. If you're looking to trade options, a popular one now would be Tasty Trade. It's not the best. They have a lot of things I don't like, but they will give you permissions to trade whatever. Tasty Trade. I did not today. That was there already. Yeah, you're welcome, Ryan. No problem. I'm focusing on the XLF down below on the right-hand side. So let me show you what I mean. Picked the wrong one. I have a lag here. Okay, so the upper right-hand box is XL this and XL that. It's all those ETFs. So the XL posse. This is their chief, in my opinion. And it's still not even at the lows from today, let alone being below yesterday. But overnight, there was this little tick right down there from Thinkorswim. It shows up at 41.73. So let's say 41.76. And it doesn't match anything in that prior day. It matches something in the post-close Thursday, which that's rare. I don't usually see a late settlement extend that far back. So that's the only thing I'm watching right now. Down to this or not. Otherwise, this is, quote, the market more so than, say, the scoreboard of the S&P. And it too is flat. Schwab worked today all day. I did not have an issue with Schwab. If you are on Schwab and you use Thinkorswim, look at the upper left-hand corner where it says connected. Make sure that you are not partially delayed. It's an easy fix, but make sure you're not partially delayed. If you are, then log into your new Schwab account and it should default you to where you acknowledge the rules and regulations. A part of it is you have to tell them that you're a non-professional in order to open up that. Free. They give you free futures, but not free companies. Okay, the advanced decline line has been straight down since the open and is bouncing off the low from Friday. I don't usually look at it that way, but you have to admit that if we lose that, whoa, whoa, it gets worse. There are a lot of buyers below on the ES. So I guess if we lose 42.40, that's basically the low of the day, I'm going to guess. I'm trying to extrapolate 42.40. Yes, exactly. So if the S&P, we could open floodgates. But I'm trying to read a heat map and put it into words, and then I look at the chart and it agrees. So there should be buyers, but they better hold. That's the message. 52.40, sorry. 52.40 ES. Well, the floodgates for short-term chart. Not like correction. We're not even red. So yeah, everything is relative right here. Let's take a red tick first. Yeah, 52.40, there are buyers, which basically says there are people, there are orders willing to fill in here. So it makes it hard to fall. So it makes it easier to go up because there are not as many orders waiting to fill up there. So the path of least resistance is kind of like this. But if they lose this level, that's why we zoom out to a higher time frame so you can see where those floodgates are. You basically retest the lows from Friday afternoon, that white arrow that I had on Friday. And if you lose that, then you come down to this area, which is 518 or lower. But we're putting the cart before the horse. NVIDIA levels for this week. I thought for sure I answered you this morning, D. You want an update on what I gave you? Okay, NVIDIA. So NVIDIA is up when the market is down, down when the market is up. All right, NVIDIA levels. That's easy. I remember saying those words this morning, you or somebody else. If you lose today's low, you're in danger of going to 860. If you take out Friday's high, you're probably going to take out 922.2 and go to 940, 945. So it's very easy. Today's low is warning 1. There's a backup to it, but if you lose that, you're going $20 to $25 higher. Friday's high gives you a breakout that could probably take out 922.2, which was the high from like a week ago, and then you extend higher $20 or so. It doesn't do anything in small amounts. Remember that NVIDIA has earnings coming in 9 days. That will make or break the market. I guarantee it. In the sense where it's so emotionally charged and it's moving markets. The assumption is that the report is going to be good. The reaction to that report, we don't know. Let me lay it out. SMCI's chart was good. Report was good. Too good. 200% growth. That's pretty good. It's not bad. Can we agree? And the stock fell. So let's just assume the report was bad. How much more would it have fallen? Okay, so just for some crazy reason, NVIDIA disappoints the expectations. Not saying delivering bad report, just disappoints. What's going to happen to NVIDIA? And where is the money going to go? Micron? How many more updates? How many more times can Jim Cramer come out and say, I love Micron? Let me talk to my neighbor, Micron CEO. And let's assume, which is a very unlikely assumption, NVIDIA reports bad numbers, like shrinks in sales. Even just a little bit, because it's rolling over pretty strong comps. Wait, is it? Last May was... No, it isn't. Not yet. Next time would be rolling against August comps. Next earnings report is where the NVIDIA risk would be on the market pretty huge, I think. Because it's going to be messy. Let me explain. I believe last May they reported okay sales, a little bit lower than May of 2022. So this is 22, this is 23. The reaction to this report, even though it was lower in sales than the year before it, I'm speaking from memory here, double check, was a rally of 30%. Because they said, next time we report, next quarter, we're going to be 40% higher in sales. So here we are, 2024 May. The sales number here is going to still be up here, rolling over the old levels. The higher level sales came a quarter after this one. So still 2023, August or September, whenever it reports. So the next time we report 2024, this one is going to be against this candle. They're about the same size. This one's going to be against this tiny candle. So maybe we get away with one positive response still. Does that make sense? That's comp sales. I'm looking at big picture things that can move markets in big sizes. Last May, the market broke out because of NVIDIA. This May, that's the 1 year anniversary. Okay, what about, have they been talking about sell in May and go away thing? And can we put that meme to death, to bed? They are? Okay, that's a good sign that they're looking that one. So maybe they're pricing in puts. If the premiums are accelerating, maybe they're pricing in the puts with a higher degree of possibility. All right, the buyers are showing up, but guess what? They flushed a lot of those orders. So now those buyers are kind of gone. You know why I said there are buyers below? That little dip here flushed all the orders out. So now it's easier to cut through a little bit lower. And if they keep selling rallies, maybe we are going lower like this. And we are not even red in the market. All this quote pain and redness on the 5-minute chart, the markets are flat to green. If we ring the bell here, here's the headline from CNBC. Markets correct because the Dow is minus 0.1%. Markets finally take a day of rest as the Dow fell 14 points. I have not been looking at the prices of the puts, but it's a tough deal to buy puts unless you nail the entry and you're trading fast. Buying and holding these days, calls and puts, they're milking them both. Like anybody that was feeling good about this morning got stuck in calls. That's why I hate it when they do that. I'm new to options. Okay, so somebody's new. No, I can answer now. No, I'm not sending you an email. I'm here all day for you. Ahlan from Dubai. So, can you hear me, first of all? Make sure that they are okay. So if you're new and you've been trading stocks for a few months or years, you can start by, before taking positions in stocks, asking, hey, I'm looking to do this. What do you think? We can start there. And as far as learning options, I have videos for you on Benzinga. If you logged into the chat room, which you probably did to get here, the videos are just sitting there for you to review. And I think I can give you a link to that page in case you don't know where that is. That should take you to some videos. Start watching them one at a time. Watch the first one. They're in order of logic. There's one, what's a call? The other one, what's a put? And one, what's a spread? And then you will have questions. Come back with the questions. And then there's, what is a credit spread? What is an iron condor? So, meanwhile, continue trading how you trade. Just get me involved. Get us involved. You have friends here. We have 250 friends, 260 friends. Just asking to learn something new. Would you ever defend a vertical spread by rolling it into a diagonal spread? I would defend it however you can do it. I wouldn't increase the size though. So if you can get creative, I just don't see the scenario where you can do that. Rolling it into a diagonal. Interesting. I would have to see the scenario. It sounds pretty complicated. Okay. Just for anybody that, so the other day, actually earlier today, I said it looks like a scenario we had the other day where the VIX gapped up with the market, and then the VIX then fell apart to have an incredibly bullish afternoon or second part of the day. I don't remember if it was afternoon or mid-morning. So we have the makeup right now. The VIX is still up. The markets are not down. It feels down. All the mega caps are in the toilet, or the XL posses are in the toilet for today. It is very easy to make a higher high on the day right here. All you have to do is just drop the VIX all the way down to 12.8. Job done. You will find leaders come out of nowhere. Nvidia is not even red now. Nvidia recovered. You got Micron running. You got Apple running. And you got Microsoft recovered half of its drop. Google's been in super low levels today, and it's up. And you have 6 or 7 ETFs ready to rally back. It is very easy to get back to the high of day and break out and have a green day. That is the kind of market we have. It should not happen, but there's nothing in the way. Like I'm looking at the heat map, there are no orders above here. If they want to spike, they can spike. The door is open. There's a level that they have to fight. If you look left, from here to 521.30, they shouldn't just cut right through it. Buying puts for the overnight trade is a difficult job to do these days. I'll be right back. Okay. What did I miss? Nothing. Iron Condor now? No. If it was too narrow earlier, it'd be too narrow now. But we can do an Iron Butterfly if I have data. Okay. So let's recap. Whoa, what just happened here? Zoom in, dude. It's a complete mess as far as order, and I'm going to go with levels. You have this level right there. Where there should be sellers hiding. It's not evident, like from the book map, heat map. It's kind of an even fight. So I can't say emphatically don't hold calls, don't hold puts. In theory, if they're selling rallies, look what happened last time. Oh, by the way, let me check on the Iron Butterfly, Iron Condor. The Iron Condor from this morning is down to 0.6, still barely profitable. All the value is in the credit put spread side. That update is there. So if you were worried about it, close it. A minute ago, it was a lot redder. That's one thing. Second of all, if you think we are doing the same thing over, so we went sideways, we fell, we popped. And when we popped, we gave it back up. So if you want to say, okay, we popped and then we ended up lower, and if you're afraid it's going to happen again, let's see if it does. It's not evident. I'll tell you in a minute if I get clues. Now you have ammo to go up from here. You have all the mega caps, all the XLs, TLT, let's see. Oil is off its highs a little bit. The TLT is tight. Something is going to go on with auction. Do we have any auctions today? Because we have higher lows, lower highs coming to a pinpoint in the TLT. So my question is it 89 or 91.5, 92? Next on the TLT. Okay, thank you. The point of control on TradingView is that thin line. So 521.3 is the highest point of volume based on what you see on my screen, the period of time. If I go to Thinkorswim, it's more like 52.52, the highest point of volume. And that should be resistance. If there's any fairness in this world, it should be resistance. I'm just floored at the fact that we're not even red. A win for the Bears is not to lose big time. Like, oh yeah, I hung in there. I was able to win one game. He beat me 6-1, 6-1. Not 6-0, 6-0. Okay. Any specific trades? Who's reporting tonight? Should we get into preparation? Actually, let me check on data. Maybe we can do an Iron Butterfly and just kill some time waiting for it to develop. Okay, SPY, we are at 521.2. We're in balance here, 521 to 522. There's no downside pressure, there's support. So we're in a stall. How about the XSP? We are at 522.5. Looks in balance as well. So if truth be told, An iron butterfly at current price makes sense. Let me save it. Five two two five, 5220. So let's do it. 5225. $15 wide, risks $900. We cannot do that. So because it's $860, that's how much it risks. I'll tell you why you can't, and I'll tell you what would be an alternative one. $5,225, $10 wide. Would risk $300. So you collect $700 to open iron butterfly. I'll explain what an iron butterfly is in a minute. Let me go and invite people in here. Lesson. I wish they have an call out like at all. I have 225 people in there. Let's see. Thanks for posting. Yeah, they're buyers and sellers. I'm not sure there are any bears out there. I also said, Tom, that I'm guilty of not being able to switch over my language to buyers and sellers. I will. Today is the day. Buyers and sellers. Okay. SPX. I think I have a representation. There we go. Okay. This is going to be a lesson on iron butterflies. Let me pop into Twitter, actually. Can we get some Twitter? I'll give him a minute. These areas are maybe in question. So the way the candles played out, they pretty much kept it tight, like no open, very big open gaps. Maybe there is a place to look at 5207 and maybe 5100 and change, 5180 something. There's one at 5080 something. So I haven't done a complete study on the SPX. I've been focusing on other tickers, but no. It's doing it now. It's struggling with the levels. It should. This is where we should struggle. You should look at the ES, if you can follow the ES somewhere. 5252. But look what they just drew with this behavior. Inverse head and shoulders, right? Right. Look at it from the daily. No, not for comments about, what do you mean the daily? We are literally have never been higher than this spot right here. The S&P is at the all-time highs. So you haven't been watching my videos at all. Okay. The inverse head and shoulders were at 460. We're hunting the target of 530 to 560. Once we broke out of 460, that was the inverse head and shoulders on the daily. That targets 530 and 560. These higher highs and higher lows are headed towards that target. Let's do a lesson. Whether they want to come or not, let's do it. You're lose, as they say. All right, so iron butterfly, if you're familiar with an iron condor, an iron butterfly is indeed an iron condor. Let's use today's levels, for example. Actually, let's use today's levels. What was it? 51, 52.10. I said I can sell the 52.10, 210, and buy the 52.05. That was the credit put spread, right? And the credit call spread was, look at that. That was the credit call spread on Friday. Or last time we did them. I don't know if we did one on Friday. 52.55 credit call spread and 52.60. I just got a brilliant idea. I'll do it later. Okay, so an iron condor is basically says sell risk below support, sell calls above resistance. And if the SPX closes inside that range, I win 25%. Okay? Okay, but listen to what I'm doing here, Ahmed. It helps. I'm using very simple words. I know you don't have any experience, but let me tell you. Now, when you trade with stocks, you buy shares or you short shares because you think price is going in a direction. In this case, that's not it. We're selling something. You can go learn what that something is later. That brings us income. So I collect $50 from selling something down here. I collect $50 from selling something up here. I'm basically saying we're not going to be up here. We're not going to be down here. And I collect $100. And the maximum I can lose is $400. So that's a reward of 25% to the risk I'm taking. Okay. If the bell rings and the SPX is inside that range, I win. That is an iron condor. The iron butterfly is a version of the iron condor. Indeed, it is called an iron condor. So instead of selling it down here and using a range, I'm saying, you know what? I think it's going to be 52.20. So I'm going to sell it right here. And I'm going to sell this one right here. And that's where the butterfly name comes from. It looks like a butterfly. And these are the wings. So you're doing an iron condor, except you're making them touch. So you end up selling something here and collecting 2, and selling this one, collecting 2, and then you're only risking 1 kind of a deal. actually less than that. So that is an iron butterfly. In our case, I'm saying a $10 wide iron butterfly would give you $700 in credit to open the trade. You open the trade, $700 goes into your account. The maximum loss is $300. So if you have $300 in your account free, you can open one of these. The conviction is not very high because people usually take them to make $700. If you can close, if the bell rings and we are exactly where you said it will be, you make 700. If it's close to it, you make 500. It's a little bit further, you make 400. And if you're outside the range, you lose. How much do you lose? 300. So my goal when we take these is to buy it back early for less than what we collected. Let's say we sit here for another hour. This 700 will be 600 because time has elapsed. I pay 600, I book it. So I made 100. Left 600 on the table. Why? Because I took 100 from a risk of 300. That's 30%. That's amazing. If you make your goal to make money, not all the money, it's very pretty. So that's the iron butterfly comment. Okay. Okay, so now we have two possibilities. If we take out that little jaunt at 521.35, we get to 521.60, the letter R. Remember that there's unfinished business up top that we left today. And that which looks easier, maybe, to lose 521.10. And if we do that, we get to 520.9, 520.8, and maybe we finish that ghost pattern that I did. What am I saying? They are selling rallies still today. So here's the day where the bulls, the scoreboard is green, arguably, or was green earlier, and the bears are completely in charge. The sellers are completely in charge. What are you saying, Nick? What I'm saying is that the score may be green and the sellers can be in charge and vice versa. Days where we gap up and open and then we drift lower half the day, the sellers are in charge. Lower lows and lower highs. The bulls can change that. The buyers can change that here by overcoming 521.40 and they get to 521.80 and 90. And then they have to deal with more problems up there. 522.20 would be normal for me if they want to go there today or tomorrow. So Ahmed, تحكي عربي؟ Okay. So بتعرف شو call and put؟ بتعرف البasics؟ What is the call? What is the put? No problem. I'm talking to Ahmed Reza. Probably doesn't speak Arabic. Anyway, Ahmed, if you want to learn the basics of what is a call, what is a put, that would be a great start. Because that's the basics of the options. They're not very complicated, so don't overcomplicate things. Don't read books about it. Just watch my videos. So now, if you're looking at my screen, we have a fairly large inverse head and shoulder opportunity here. Basically, if you take out 521.40, I'm repeating what I just said, you can target this area in a couple of jaunts. This is an area of interest. They left some unsettled candles here on the way down. Okay. Now, conversely, you need to hold this because somebody can say, oh, this is a head and shoulders. Well, I would like to look at it this way. So if you lose 521.1, you might end up in this zone. There are no, okay, sellers might be just starting to show up. Maybe. I'll keep you up to date on that. Let me go check for messages. Oh, what a day. collab partnership. What is Moomoo? Anybody know anything about Moomoo? What is that? Partnership invitation. Online trading platform to invest globally. Is that a trading platform? Oh, it's in Singapore. No? Anybody heard of it? Okay, so this red thing that it just showed up, it just gives a small edge to the sellers. Small, that's not an even, I mean, it doesn't even describe it well enough. So the downside of it could be 521.2 or 521.2. You could hit that candle right there. Target 3 of it could be 521 flat. So that's the best message of that red thing for the bears. Let me give you a number on it. So 2 ways of interpreting this one. 521.05. I have a lag in my computer today, or 521.1. So we're splitting hairs here. Just don't worry about it. It's just an equal opportunity, in my opinion. Breakout or breakdown. These are like in quotes, breakout or breakdown. The breakdown is not that big. The breakout potential could recover those areas of interest up top. Okay, pretty busy day. I haven't sent a trade yet. Shopify is the trade from Friday. I actually took it in order to know that the premiums are there. So let me see if it's still viable. Still viable. It's about the same price, a little bit less than what I collected. There's no rush to go into any bullish positions, especially one that has 67 days on the clock. But if you need some bullish positions to balance out a bearish portfolio, why not? It's a good company. It's lost a lot of steam, and most importantly, all the quote experts are blown out of it. What do I mean? They already downgraded it. Price target downgraded. It's a broker like Webull. Futu Holding. Oh, owned by Futu. Interesting. I didn't know Futu. I thought Futu was a TV company. Okay, so we have the advantage to the bears comes from the fact that we have lower lows in advanced decline line, and it is lower than Friday. Meanwhile, Apple keeps accelerating. So what is happening here? Who's reporting tonight? Why are people flying into Apple today? Maybe catching some bids out of Alphabet. Fubo. Got it. Yes, Fubo is what I'm thinking. We traded Fubo a few times, believe it or not. We traded IQ. IQ had a lot of wins and gave me a lot of wins. I remember the last one I sold like an $18 put on IQ. The Netflix of China. Remember that period of time? The this in China, the that of China is, and Hua, Huya. I don't know what they did. Let's see here. IQ, is it still alive? Yes. $5. I traded it last around 18, 16. Oh, look at that ledge. That's when I left it. Once a stock does a major drop like this, you should just walk away. Walk away. Just like Hyliion did. It's the same posse. They lose a level and you say, okay, mathematically you're going to zero. Bye. Tough rising wedge in Apple. So one would think that Apple needs to come down to 185. I know a couple of you are short Apple. One from a while back, one recently. So be careful with Apple. Timmy is always dangerous. Thank you for the Futu answer. Yeah, they sent me an email. They want a collaboration. I don't know what that can be, but I get those all the time. At least this one didn't say dear and my email address as opposed to my name. All right, this is it, sellers. You got to stop the buyers right here. There's no order. There are no orders up there to stop them. So if anything, it's going to have to be based on levels. It's not a slam dunk. They are buying dips. So you remember how I said the sellers are in charge all day? Well, guess what? Since 45 minutes ago, the buyers are in charge. Higher low, higher high. Okay. So it all depends on the span of time you're looking at. Remember, these are 15-second charts. So if you want to incorporate the whole day, it is still the seller's market today. How can I tell that? Just draw a regression line. Pick a time frame. So just before the open until now. I didn't put it slanted. I put it down, just across. So it still shows you a slant. That's what's been going on. They're selling rallies all day, right? But if I move it to the last 45 minutes, it is no longer with the sellers. Now the buyers are in charge. This is not a tradable thing. Like, you can't trade these lines because they represent what's going on. They don't forecast what's likely to happen. But it gives you a visual representation as to whether you should buy dips or sell rips, buy calls or buy puts. Okay, so have you ever heard me? Coin would not be a stock I would invest in for the long term. Just so I know that you've heard me, so I don't have to repeat it. I'll repeat it anyway. Okay. I would not invest in coin, in case you haven't heard me say that. I'm puzzled as to why people would want to do that. I'm not saying you're not smart for doing that, but I'm pushing back. It's like, why? Why no? Okay. So when I go along, when I invest in a stock, pick one, AMD, I have to worry about AMD's story. And of course, I have to worry about the stock market story. I don't have to worry about the price of gold or the price of Bitcoin or the price of oil that I can't control. I have to worry about if my product is good and popular and I control my own prices. Versus, I go long coin. Coin seems to be tied very closely to the price of Bitcoin. So I have to worry about coins, company operations, and viability and popularity, and how good are they at making money. And I have to worry about, of course, the overall market situation. Coin is not going to rally or fall on its own. Well, it might fall on its own. It's not going to rally on its own. And then I have to worry about the biggest price driver these days for coin is the price of Bitcoin. So why would I want to do that? Why would I want to add an extra variable to make it less of a predictable stock? Why not go straight to Bitcoin and trade Bitcoin? You can do it you without having a crypto account. You know, you can trade Bitcoin ETFs, which my favorite so far is Bito because it has more history than those other ones they introduced. I don't even know the name. Is it BT one of them, or is that short Bitcoin? IBIT, maybe? So make sure it's a liquid ETF from a reputable company. And they are changing the definition. Like Bito changed it twice, the listing on the SEC. I hear that the other one now has changed where they're adding more players into it. Those changes will bring about a huge rally in Bitcoin. And I mean huge. Bitcoin should be in the 200,000 level, just from a mathematical perspective, from those new ETFs. So coin would not be an investment. I will look at it though, because I don't run your account. So let's go look at coin. Okay, so this stock, lower highs, trying to hold the floor. You can either spring up to 220 or 240, or if you lose the floor, which is 199, you're going to 160-ish. One could argue that because you lost 200, hopefully you're writing these numbers down, you're going to 157. That you're already triggered a bearish position, that if you don't recover 200, 205, you're going lower. Let me show you the visual. Maybe I have it already. Have you ever had a time where you forget what the combination keys are, like Control-Shift-H or something? Okay, there you go. That is in play. That red line is in play. You can argue that it started at 220. I said 200. It's 220, sorry. 220, let me double check. Yes, from 220 you lost $60 worth of potential. So you can drop 60 bucks from 220, okay? You can argue that that was the neckline that they lost. So either way, lower lows and lower highs, I would not be long coin for the long term. 2 to 3 months, I would not be long. Let's go down shorter term to see. Rallies into 212, better hold, and they better take out 216. How about that? I'm going to give you another number here, 216. And 209, you're going to find sellers at 209, hard sellers, 209. One hour, 30 minutes. Yep. Everything I said is good. Oh, you know what? I haven't looked at that all day. Let's go check. Oh, you know what else I looked at? Folks, listen up. People on YouTube, listen up. So we have tools. We can't use all the tools all the time. But when we're laying big money at risk, we should. So one of the tools I use, well, I have access to, I don't use as often as I should, is shoot, what's it called? Market Structure Edge. I have a couple of queries in there that looks for bargain stocks. And to make a long story short, I look for stuff that's oversold. Okay. I ran the query for under 30 and just an all dollar query. I have 5 stocks that are a bargain. Okay, that's it. 5. 6 actually if I take out all the filters. So let me tell you what they are. BAX, GPN, EL, CVS, Fortinet, and X-Ray. And let's see here. Fast trend, active, fast trend, passive. Okay, so BAX and GPN has passive money, so those people don't change their mind often. So what does that mean? They have their quote, sentiment has hit the floor. It cannot get any worse from a sentiment perspective. Demand on the stock has hit the floor. That's it. Usually you should get like 20, 30, 40. 2 days ago I had like 15, 11 on Friday. Today, 6. 5 or 6, depends. So what am I saying? Things are up there. But if you take a look at the demand overall, it's still okay. It's 5.5. Normal is 4 to 6. So we have room to continue building this exuberance up. So I'm looking at rising demand. If I want to avoid things that have rising demand and into a limit. So big statement there is that there aren't any bargains out there, which we've been saying for a long time, but this actually gives me a mathematical representation of it. All right, now off to Tradie Ticks. I need to log in. Something happened. Windows updated something on my computer. I'm not happy with it. I'm tempted to sell it. I'd hate to restart everything. Okay. $522 is the biggest magnet, $523 as well. So we're looking up from a gamma perspective. And there's no graphic. It just says that demand could not be any lower. So that's all that thing says. They have a mathematical computation they call sentiment, which is such a misnomer. They should just call it demand. Demand is as low as it can be. It cannot fall lower than where it is. So you're not buying it at the top. Fortinet. You're not obviously buying it at the top. Those guys know what they're doing. If you want to learn, okay, Atlan, Arc B. What is Arc B? Y comp. It is useful, so tell me and I'll share with you. Oh, you want to see the app, so you know how to use it. I'll give you a visual. Wow, they have a Bitcoin ETF, ARCB. I wonder what's in it. Nothing. They don't specify. What is your ETF then, ma'am? The index is designed to reflect the performance of Bitcoin in US dollars. In seeking to achieve its investment objective, the trust will hold Bitcoin and have value and will value its shares based on the index. What index? There is no index for Bitcoin. What is that? No touchy. No touchy. Apple thinks it's BITO. Okay, that XLF is stubborn. It's not going down to that 41.73. And sellers have the opportunity at 521.20. I went silent, yes, because I don't know what to say about it. They don't say what's in it. They say they will hold Bitcoin and value it based on the index price. What index? It's like Taco Bell. We have taco meat. What's in the meat? What's taco meat? I'm adventurous, but give me a hint. Does it whinny? No? Does it purr? No? Yeah, I don't know what's in that Arc B. So everything is hunky-dory. Everything is hunky-dory with owning an ETF until something goes bad. So when something goes bad, then what happens? Let me see if I can explain it. Let's say Bitcoin crashes down to 5,000. It's happened before, but not too long ago. Let's say it goes to 10,000. What happens to ARCB? What happens to BT? What happens to IBIT? BITO? Do they break? BITO has been tested. Oh, Joel. BITO has been tested very severely, and I'll tell you why. We did have a correction. We did have a crypto banking scare. We had banks go out of business that are crypto banks. It's been tested. So it survived. They had a couple of alterations to their SEC filings or descriptions or whatever they call it, the mission statement. But it's been tested. So that's why I prefer BITO, not to mention it pays a big fat dividend every once in a while. I wouldn't call it dividend because they don't commit to it. If they make money, they share the profits. And they've been huge. $3 at least in the last 2 months. $3. Chew on that. So if you bought BITO at 25 and it falls to 22, you still haven't lost money in the last 2 months. $3 more actually than $3 in what? That's like 10% a month. That's insane. The government will not let that continue for too long. They will ruin it. They love that. They love to ruin parties. I know it's not a spot ETF. I agree. But it's been tested. It's they do whatever they do in order to trade, to make itself look like Bitcoin, and then they share the profits. They state that. They restated their SEC filing in order to make that clear. That's why I say don't accumulate BITO thinking you're accumulating Bitcoin. You're not. But you can't argue with 10%, 8% of dividend every couple of months. That's just a huge. I mean, after a while, if I had held my BITO, I would be down to a price per share of $4 at the entry. Because I got in at 10-ish, the lowest. I've got in at 11 and 13 other. And I collected $6 or $7. No, $3 or $4 from dividends in 6 months. So my entry price was definitely single digits. If I had hung on, just the last 2 months would have brought me down to like $4 of a base price in the BITO itself. And at some point, it becomes risk-free. You just take out your initial money and you just let it work. Okay, so losing the 521.08. These are lines I mentioned a minute ago based on harmonics and all of that. And they were too tiny that I didn't pursue. But you should know that now we're making lower lows and lower highs. And if we make one more lower low, we are probably going to 520.95. Very short-term comments. If you want to discuss slightly longer-term comments, let me know. Let's say somebody wants to sell a put spread today in order to balance out a position. That is bearish. So let's say you want to choose a credit put spread today. Which one would you do? Okay. So I would go out to Wednesday. And if I go to Wednesday, I may be able to, let's see, what is Wednesday the 15th? I can sell a 51.35, 51.40 credit put spread. Get myself $70, $50 per contract. And that's a couple of days. So I rolled up some credit put spreads that I had for the 16th to collect more credit. That's what I did today. I deployed some 15th to balance out a bearish portfolio. I don't recommend it for people that are not bearish. I don't sell credit put spreads at all-time highs. And I'm thinking about selling a couple of more call spreads to add more shorts. I don't have enough in the sense where I don't have enough in trouble to be like changing my mind about things. I respect the upside potential, and that's why I keep selling put spreads in the meantime and closing the credit call spreads whenever they become profitable. I don't sit in them in order to get paid. And my portfolio is totally okay today. I should be bleeding. SMCI is having a bad day. The credit put spread, I don't know the quote for that guy. I'm going to try to close it. I keep trying to close it. It doesn't fill. So remember that next time you trade SMCI. Not liquid. So I'm going to offer them $30 to see if it closes. Use one contract. Buy to close, sell to close, $30. Let's see. And leave it there. Maybe it'll give me a better, truer quote. No, still like $60. I'll just leave it there. You never know. So Stan pushed back on the fact that BITO is a strategy, and I agree. It's not like buying Bitcoin. Oh, now the buyers and sellers showed up. So one last flick lower will open up all the orders, and then they pop, and then they lose their lunch like they did earlier, or vice versa. So now we have a battle. Buyers and sellers at the money within $2 of each other. $2 above and $2 below current price are heated battles. Something is about to happen. The Iron Condor from this morning is $52, so let's round up $55 to close. If you want to close the credit put spread only because that's where all the money is, it's only $45 to close. Either way, it only offered $40 tops, $35 to $40 per contract. If you did 10, that's $350, $400. What's wrong with leaving it all on the table? Just close it. Take the small win and move on. Or cut it down the size. So if you took 10, close 5 or 6. So then if you get hurt or one of the sides gets challenged, you don't have a big problem to deal with. Okay, sellers look a little bit hotter than buyers, so maybe lower is easier. Let's see. I'm talking about the S&P, so we're probably about to go to 521. And if I were to put a line into it, I would say this is easier than the breakout. So this is still in play. The fact that they went up before they come down doesn't change anything. Look at that. So you see how the behavior is the same. I'm going to delete it because it's just old noise, and then I'll forget about it. It's hard to see. All right, I need a beverage. I'll be back. Birds make the best parents. This bird here pecks at my window all day, pecks at the car, other people's windows, defending his nest from an enemy that doesn't exist. Walking at the park, the birds nesting in the trees, I'm assuming. The kind of bird, I don't know what it is, but in order to draw your attention away from their nest, they drop themselves onto the ground and they act injured. And they go in the other direction. I think that's hilarious. Somehow I'm not understanding you. It sounds like you said you never sell credit put spreads at all-time highs. But it also sounds like you're using credit put spread as a defense. Correct. I'm very short. A few long positions don't hurt. I'm balancing my book. I can take maximum loss on those credit put spreads I'm selling and still be totally fine. So I wouldn't go long a stock via credit put spread when the stock hits all-time high. That's not what I'm doing. I have bearish positions. One of them is in trouble, and I'm defending it by bringing opposition to it. The credit put spread I sold, I would not have sold under normal conditions. That's what you do in a bar fight. You fall and you act injured and you go the other way. That's hilarious. Oh my gosh, that's funny. Now that is a cool dad joke. Like a dad that's cool telling a dad joke. Yeah, I already told you. I mentioned one. Like May 15th would be one. I said at 51.35 credit put spread brings $50 to $70. So to give you an idea of what I'm exposing myself to, I have a credit call spread that pay me $70. It's under fire, but for the last 3 or 4 or 5 days, I've been selling credit put spreads for about $50 or $70, $40 to $70. So let's say I collected 70 first, and then another 50, that's 120, and another 40, that's 160, and another 50, that's 210, and this one here, 50, that's 260. So now I've reduced my maximum loss down to just 240 from the initial 430. So I have a problem. I just made it a lot less worse. If you don't understand that concept, it's easy to visualize. So I have a credit call spread. Okay, let's say I sold a credit call spread on a chart. That's a bearish position. And then the stock went like this. Stock market's strong, so I've been selling credit put spreads down here along the way as time was ticking last week and the week before it. I've been selling, collecting premiums. So if I collected $50 here, I'm going to make it round numbers. And I collected 50 here and 50 here and 50 here and 50 here. So suddenly now I have $2.50 in credits. So even if this happens, I reduced my loss from 450 to 250. And if this happens, my max loss is still 250 because I have these will win, these will lose. These are dead, so only this one will lose. So that's the kind of trade. And not to mention that my entire portfolio has way more credit call spreads than anything. So if we drop, all of the portfolio would be super green, and this one trade I took today will be red. Who cares? You gave a trade with $300 entry and ROI of 100. An iron butterfly, Granville. The iron butterfly is winning $25. If the SPX is at 5225, which is where it is, for another 30 minutes, it should be cheaper. So we are exactly where we want to be. Can you trade it now? You can. You just need to know that those trades are high level. So if I did it earlier, I collected $700 in credit. And if things go completely wrong, I could lose $300 today. One contract. SPX, not SPY. Right now, I'm making $25. Why? Because it is $675. I can buy it back for $675 and win. So the way I would do it is, if I have the trade open, I would open to close it. I would send in an order to close it, but ask that I would only offer $650. Okay, I can do that. The minute it gets down to be $650, if it gets down to be $650, boop, I get filled somewhere around $650. What would have happened then? I would have made $50 out of risking 300. Divide 50 by 300. That's a legitimate win in the span of an hour. But Nick, you left $650 on the table. Did I? Maybe. The idea that I can pick the close from now is like making a hole in one in putt-putt. It's doable, but it's definitely not easy. What about if we rally those credit put spread won't help much, but they already died in my favor. Yeah, this particular one won't help much. It will cut my losses by $60 per contract. I don't know about you. That's something. So you should say I shouldn't do it. I should just sit there and wait. What's the alternative, Steve? What is the setup? I want to buy it. First, you want to sell it. I don't think you're qualified to do it, so do it on paper. Do you have paper trading? You want me to book my loss and change my mind, Steve? That's the alternative. Okay, so I reserve the right to stay short for now and hedge my bet. Okay, so do it on paper trading. The trade looks like this. And you should know that it's already working, so you're coming into it pretty late. And by the way, those who took the $15 version, if anyone did, you already made $50. But that's only 10% win because your risk was $600. $900. No, $600. So it's different. It's a lower percentage win. All right, so this is SPX Iron Butterfly explanation. No one should take this that doesn't know what they're doing. Okay, I'll walk you through it. This is SPX, first of all, not SPY. I sell a call and a put at 52.25. I buy a call higher, $10. I buy a put lower, $10, all on the same order. So the order will look like sell call, buy call, sell put, buy put, on the same order. I'll have 4 things. The credit was $700 to open. Now it's $670 something. So when I send this order in, it should say net credit. If it doesn't say credit, if it doesn't say 6.7-ish, you're doing it wrong. Your break-even point is 52.18 and 52.32 SPX. If the bell rings and we are at this line or this line, you lose no money. If you're inside, you're making some money. The maximum is 700. So that's the setup. And there you go. I win again. So the downside was more likely. Cha-ching. Now, how cool is that? How can you get people in here, man? We need more people in here. Are you kidding me? We're like on rails. That was an interesting little thing here that just happened. And guess what, friends? Guess what? What am I going to mention next? Can you tell I got a little bit more caffeine right now? The beverage was caffeinated. Yes, it is a $40 winner, $30 to $40 winner. Open the order to close the win. Then you don't have to chase it. You know what you're doing, Chicago. I'm talking to the rest. But you need it at 52.25. If we go away from... That's weird that we're winning. It's set at 52.25. What's going on? It should be losing. Any of you have a lot of followers on Instagram? Can you post the link to YouTube on Instagram? Not the link to here. I posted a YouTube link earlier. On the gram. Do we have any social media experts in here? Okay, the ticker I'm going to mention is, I'll give you one more chance. Good guess, Pamela. No. It's part of the XL posse. Caffeine is working, yes. GME, yeah, right. No. XLF, ding, 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 ding. XLF, ding, 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 ding. Yes, look at it. It's coming to that. Look, I mean, what? Are you kidding me? We need somebody working at some TV station. Are you kidding me? I'm walking around the office in case you haven't noticed. Yes, I am caffeinated. So, how is this not on every news channel there is on the planet? Like, what are you talking about? How is it these phantom dips and pops that happen and nobody talks about it? It's freaking choreographed. I don't like to use rigged, but it's well organized. Yeah. But if I say it's rigged, people would leave. It's well organized. And if you know that the dealer is cheating, you know which bets not to take. That's what I'm saying, Ozzy. Is this Texas, Ozzy? Kentucky, different Ozzy. Okay, so die XLI, please and thank you. Why? Because I'm short and you guys know about it. How is my trade doing? If somebody bought a put, they're down. It's a September put. I don't know if I sent that out, but I sold a call spread, and that is not down. Well, that is not losing. It's still, the delta is 20 on that one, so I'll stay in that one. Oh, I see. I sold a call spread and bought a put in the XLI. I need a bigger dip than this. This is not good enough. Nice work, Linda. Nice work. Look at that. Look at the XLF. Look at the freaking XLF. Oh my gosh. I'm going to spend some time today and I'm going to skip the gym. I'm going to try to do a video to highlight the events of today. Take some time. I'm still sore from Saturday anyway. They're gapping down. So, and there's still no buyers below. No support yet. A lot of sellers above. Don't buy calls. Don't buy calls. It's very volatile, so they could appear out of nowhere. If you want to buy calls, it is a correct thing to do. We're falling into a very harsh bounce. Buy some calls if you're fast to get out at 520.8. If you're fast enough, get here to 520.8 and stop out if you lose X percent. So if you spend $90 to buy the call and set a number that gets you out, you may get 520.8, maybe 520.7 on a bounce. Apple hasn't even started falling, so that's extra downside fuel if they want it. And if you look at the scoreboard, we're down 0.08. Now the market is red. All day, no red. Now the market is red. Okay, so if you want to go long into the gap fill, fine, but stop out if we lose yesterday's low, because we're headed much lower. Okay? So I'll say it again. You can go long by buying a call today or tomorrow. Today is still okay. Into this gap up level, and stop out if we lose 520.5, 519.5, 519.5, because we could be headed to 517.60 after that. I still don't see orders below, so there are no buyers lined up below. That's what happens when the rally gaps and there's no history there. You literally don't have any orders to lean on. You want to see what that looks like? There's nothing down here. On the NASDAQ you do, so maybe the mega caps will hold us up. They show up and they go away. At least they're trying to buy the NASDAQ. The IWM, folks, is still green, 0.3. The Dow is the biggest disappointment. The Dow, if you were here early, like I started talking really early today, you saw, or you heard me say, the Dow already made a higher high than Friday. It was on the back of Goldman Sachs and such. And look at that. Look at that. What the fudge? Get out. You're looking at the XLF 41.73. Isn't that the low? Golly. I'm way too excited. Oh my God. Now I'm too caffeinated. I gotta drop and do some push-ups to get some of that energy out. I'm like a little kid when it comes to energy. Just don't give me chocolate. I know I posted this XLF somewhere in the charts, maybe. No, I've talked about it. Anyway, and okay. So now we're at risk of losing Friday's low. This was quite violent, but it's barely red, folks. It's barely red. Darwin stepped away. Who was asking here? Rob, you got my message? I sent you a DM. You guys know that you can message me directly, right? Here. Before you type in the message, you just choose who you want to send it to. And if it comes out red, nobody else can see it. So if you ever have something that I didn't answer, I probably missed it. And if it's important, send it as a DM. It pops red on my screen. Yep. So the proper way to trade this is to go long into the dip. And stop out. So if somebody took long, like I said, you're allowed to take longs, and you caught a nice rally here, you should know that there are sellers. Like 520.4, 0.45, there should be sellers. 520.6, they should be sellers. And there's no reason to come up. Yeah, there is. 521, a lot more sellers up there. So these two candles are no good. They left some unfinished business up there. But you could argue that this was to settle this junk. So at some point, how about we say it this way? Nothing new has happened since this morning or since last Friday. This is just an emotional response to whatever the hell they're peddling in the news. Can you tell me the poor schlep that got long Tesla today at 175? Can you just call him up and say, please come join us? You cannot be doing this. I'm assuming Wolf is doing well with that. Somebody else shorted Tesla this morning. Good job. The person that shorted Apple is not happy because Apple is a safe haven during, quote, what do you call that? Markets in turmoil. Hold on, let's bring that. Markets in turmoil. I know I have it. There it is. What? I just had it. It just disappeared. Oh my God. Anyway, I have some funny memes there. Come on. Oh, geez, that took too long. Okay, so if you bought calls, lock them as we close. Like right here, there's a resting spot. They might dip a little bit, bounce off of 520.20, back to 520.60. But there are a lot of sellers above here. I would lock my calls at the risk of missing out on more upside. If you made 20% on this bounce, you should be happy with that. Butch, SPX 5260 for tomorrow, Delta 11. Credit call spread? Fine with that, Butch. But you should have done it this morning, not now. Statistically, that is a proper way to set up a credit call spread. If you're going to make it a bit of size, why not marry it with a credit put spread? You're still going to see that as a sensor. TMI, but that's funny. Oh, Baba. Yeah, I'll check Baba for you, Chris. 1 second. Okay, Angel. Did I address that earlier? Why do I think I answered that question? Somebody on YouTube asked me that. Was that you? Okay. So the question is, a Palantir call July, average cost 82 cents, down 45%. Okay. I can go over a chart, but I don't need the chart to answer your question. Palantir is inside of a support zone that absolutely needs to hold. If it doesn't, it takes another $1 or $2 lower. Palantir for the long term is a good stock. If you were long shares and you told me you're down 20% or 30%, I would have said no big deal. Now, the reason you took the long, was it the earnings as a trade, or was it really to get into an investment into it? If it's for the trade, you lost. If it was for the earnings, just reaction, you lost. You shouldn't be fighting for it. So I will check the chart in a minute, but can you do me a favor and write down these following steps. When I'm evaluating whether I should be in a call or a put or shares or whatever, the first question I should ask myself, why am I still in this trade? If that's if the reason that I took the trade is still there, watch Alphabet. Alphabet fell apart first, and now it's rallying like gangbusters, so watch your shorts. So if the reason I took the trade is still there, I move on to question number 2. Have I hit my stop loss? Have I lost enough money to where I say I'm quitting regardless? If you don't have a number, it sounds like you don't because you're down 45%. If you don't have a number, you should establish one. It's never too late to put one. You should put one just as you take the trade, but it's never too late to put one. Okay, so those 2 things have to be pass. Check, check. And then you go to the third one. What is the delta on your call? Do you know that number? That number should be right off the top of your head. I'm going to go look for it while you go look for it as well. You said July. Since when I have a credit put spread on Palantir for July? Huh. I do not remember that. Okay. 25, call. The delta is way too low. 20. Good job. Thank you for knowing that. That, for me, is not good. So I'm going to give you what I would do. So let's say 1 and 2 are still there. Yes, you want to be long. July is a good time. No, you haven't hit your stop loss yet. So let's say there's still $500 left in the trade. Okay? So what you do is, what I would do is I would rather have that $500 with better odds of success. As it is right now, the odds are in the favor of the person that sold me those calls. So I want to change that. So I will harvest my losses, take the $500 off, and redeploy the $500, not $600, $500 lower. So let's say I had 10 calls that are $500. I would rather buy 5 calls that have a 40 put, 40 delta, or 35, 38 delta, so that I'm moving my $500 risk lower to have a better odds of success. That's what I would do. Is that clear? Okay, now I can look at the chart. Okay, so as I suspected, if you lose 2040, 2030, let's round. If you lose 20, you're going to 18-ish. Maybe a little bit lower, maybe a little bit higher. Cover the gap. Nothing earth-shattering. So that's the longer time frame, longer chart comment. Rallies should be met with sellers. There should be sellers throughout 22. Slightly shorter term. 30 minutes. You can see that they're selling rallies. Every rally is being sold and it's making a lower low. So now you got to look. There's a seller at 21.50 and a seller at 22. If they lose the support from this morning, they will come down to 20 or 19.5. And if that happens, I think they drift lower into this yellow box. Not the end of the world, not the end of the world for this stock, but it's not good for naked calls long. So if I was long stock, I wouldn't even look at it. I would sell covered calls. I don't know if you can cover calls now because you're already down a lot. That might put you in the pickle. You're hoping to get assigned with what? Oh, on Palantir. Yeah. Oh, I remember the conversation now. Okay, we said we will start with a credit put spread, and if it falls down there, we'll say, give me shares, and I'll sell my protective put and all of that. Okay, now I remember the conversation. Markets in turmoil. We're almost red. That's the sarcasm on this one. The market is literally flat, and markets in turmoil. Why? Because we are not up. That is crazy. I keep saying it, I've said it, and it still hits me as crazy. You guys appreciate how crazy that is? And I've said it last week as well. We had the same scenario. We ended up super green on the day. We feel this bad, and look at the VIX spiking. Like they learned something new. What the fudge could they have learned? in the headlines, whatever broke out. I mean, what the fudge? Come on. Look at Alphabet stock. Seriously. En serio. Check it out. Look, I'll go to 5-minute chart. Look at how it fell apart overnight. This morning, the market gapped up. Alphabet decided to do this. And now it's like, oh no, wait, I didn't mean to do that. Let me go back to flat. What? What is happening? And then you get Microsoft. Whoa, Moon took the money from Alphabet. And then, oh, wait. And it goes lower than Friday. And now covered halfway and now doesn't even know it's probably flat too. Yep, flat. All right, let's go to the other one, Tesla. Tesla. What is that ticker I just had? It looks like Tesla. What is that? Telos. Wow. So Tesla, we open up to it being up 3 or 4% on whatever. I'm not sure what. You know, and it's been giving it up the whole time. Holy moly. Yeah, Wolf. Yeah. I would not have shorted Google. Say a stock is at $10 and you figured your stop loss is, say, $7.50. Is it more prudent to just wait until it's closer to $7.50? What process goes into waiting, or just take the trade? I don't have a problem waiting. Other people do. But the stop loss is a practice that you do that once you decide to go long a stock. So you can't wait for a perfect entry. Yeah, I know, Wolf. So I appreciate the question, but it sounds like you're waiting for a perfect entry. You're not going to get it. Rarely. You might get 1 or 2 here and there. So as long as you're not making a mistake, like chasing up or down, just take the position and decide to stop out if it doesn't work. There's no like one way to deal with this. Okay? So update on the iron butterfly. The iron butterfly is still evenish, little green. Update on the iron condor from this morning. It's still evenish, but it had all day to work. I would get out of it. I don't trust this market, up or down. I do not. There are a lot of sellers here, so don't hold calls for no reason. If you bought calls here and you haven't booked there, you're not listening to a word I'm saying. But Nick, it could go up to 521.4 and let it go without you. You just made 30, 40, 50% and you want an extra 10%. Shopify. So I don't remember what you're stuck with. So you're going to have to remind me what is stucking means. What is stuck? I don't remember your particular position. So tell me. I just find myself always entering a trade and it drops to the stop loss. Okay, so how about you share the entry point before you take it? That's why we're here. Don't trade alone. Why are you trading alone? Why don't you share your trade idea so we can take the opposite? No, I'm kidding. So we can make sure so we can make sure that you're not going in wrong. I'm kidding, of course. You bought calls at 65. Okay. Okay, so I don't remember what I told you, but I wouldn't hold calls in this market for no reason. Okay, you bought calls at 65 and now we're down here. So clearly you were trying to get money from an earnings reaction. That's my guess. We hit target 1, we're close to target 2, these 2 arrows. I went long Shopify, but I sold put spreads down here, knowing that I could be in trouble with those put spreads. I sent it in the message. Okay, so let me address this question that a lot of people have. I hold calls, what should I do? I just addressed one. Did you hear any part of it? Ahsan? It was a different ticker. It was Palantir. Somebody was holding calls in Palantir. So everything applies to you. No, okay. So first question is, you have to remember why you entered the trade. If that reason was the earnings, that reason is gone. Why are you still in the trade? So that's number one. Let's say you decide, no, I want to be long. 2, have you hit your stop loss? Have you lost enough money that you said to yourself, I'm not going to let it lose more than X? Okay. So if you have not, then you can go on to number 3, which is this call still viable? I doubt it. Your delta must be really, really low. So there's no chance of that delta coming back to life. I doubt it. So let me look at Shopify's stock. Yeah, your delta is like 5%. So you would need some giant upgrade from somebody and have it spike up to high heaven. Don't hold calls in the S&P here. There are more sellers than buyers above. Side note. So that call is dead. And that's why it's only $8. So let's say if I had 10, that's $100 I can save. I would take that $100 out. And if I still insist on being long Shopify via a call, and I would deploy the risk differently. Is there a $100 call I can buy? There's a $65 call that has 39 days on the clock, June. It's $90. So I'm just making it like, I don't know how many you have left. If you have 10, that's $100. You can buy one at 65 with 39 days on the clock. This way, you're not adding the risk. You're just giving your risk a little bit more life. That's about it. I'm not saying it's a good idea, but I'm saying if I wanted to stay long Shopify and I'm running out of time, I would want my position to have a better shot. What do you think of Oxy? I hate it. I hate it. No problem, Hassan. Rob, you have to be with me for a long time. Oxy is it's a long story. Let's look at Oxy. Oops. Does that answer your question? Upper right-hand corner, Rob. What do you mean oversold? By what standard? RSI. Okay, so to me, RSI, yes, Chris, Baba. To me, RSI, whoops, is not a standalone decision-making thing. So if I'm using the RSI, it's because I need a secondary opinion. For example, I think Amazon was overbought for a long time on an RSI basis. So if you shorted it every time it went up overbought conditions, you probably lost money. So it's part of the formula. It's not the trigger. So technically, you just lost support. So I can tell you if Oxy is not at 64, it's probably at 61.50. Baba. Okay, great breakout. This is about the target zone from this breakout on the daily candle. Going into a prior fail. If I'm long, I'm out. If I'm looking to get long, this here is a nope, not an obvious entry point. Whatever that pink line is. Is that a VWAP? No, a trend line. All right. How long is that trend line? Whoa, that is a long-term trend line. So pay attention to it. You're going into a very long-term trend line. If you twist my arm, I'd sell a call spread and or buy a debit put spread. If it has earnings coming, then forget about all of this. Earnings are when? Did it report earnings? So this pop is on the earnings? Okay. So I would not chase it up here. A trading strategy, if I were to trade BABA, which I wouldn't, but if I were to trade BABA, I would sell a call spread and or buy a put spread. You can do both. Don't fight the fight this week or next week. Go out to like June. Like second week in June or third week in June or something like that. Okay. Tomorrow the earnings, and it's up 5% today. Yeah, my answer is still the same. I would tomorrow morning before the market opens, I can look at options for you. It's up that much today into an earnings report. Interesting. So let me go to Baba. So they're looking to move it about $5, $6 maybe, $5.56, something like that, up or down. Looking at the options chain. Whoa, Nelly. Yeah, I would not hold calls in Baba for tomorrow. I would sell an iron butterfly below current price, like 82. Yeah, let me check one more place. I haven't traded Baba in years, so take my comments with a grain of salt. All right. We have 80 to 85 is the range you're operating in right now. They don't tell us much. So that's perfect. Take the middle. So the only trade I would do on Baba is, and this is, listen, if you haven't done any of these iron butterflies, this is not the time to start them. 84.4. So I would put it at, we are 80 to 85. So 83 or 82. Let me check something here. 6. 82. $5 wide or $6 wide. What? Oh. 2405. What's the end of the week? 19? No. What's the end of the week? What's the expiration date? 17. $6 too wide. $6 risks $400. Iron butterfly. I'll explain to you what that is. $5 risk 4. So $5 gives me, let's say, 3.5.
There are 264 participants in the
I get cut
conference.
off once a day if I'm staying here too long, 6 hours and such. So I'm almost there. Where is my platform? Oh, interesting. That's never happened before. Oh, I know why. Because I'm live on somewhere else. Okay, so 1 second, I'll be right back. Sorry, YouTube. Hold on for a second.